This is Kari's Institute of Forex Trading. This video is necessitated by the questions I keep getting every now and then regarding what Forex trading is, and then a few other questions I would love to answer in this presentation. So we're not going to take much time, but I believe it's going to answer the questions that you have been asking regarding what Forex trading truly is. So these are the things we are going to be looking at. We're going to be looking at what is Forex, history of retail Forex trading, market size and liquidity, what is traded in Forex, who are the key players in the Forex market, what are the advantages of Forex, and then we'll be looking at the commonly asked questions. So every time you hear the word Forex, commonly abbreviated FX, it simply means foreign exchange. Okay, the word Forex is a derivative of the clause foreign exchange. So foreign exchange is the exchange of one currency for another to facilitate trade and investment. The exchange of one currency for another to facilitate trade and investment. Forex is a market that enables the buying and selling of currencies in order to make profit from differences in value. Now, this is what we mean. You see, you cannot travel to a foreign country and carry out transactions with your own currency, that is with your traditional currency. You cannot travel to a foreign currency and carry out transactions without first changing your own currency into their currency. For example, if you are a Nigerian or an American and you want to carry out a transaction with Ghana, you cannot go to Ghana and use dollar to make transactions in Ghana. You will have to first exchange your dollar or your naira for Ghanaian currency, which is cedis. Okay, so for example, if $1 represents 485 naira, if that's the buying price, and then you happen to purchase $1 at 485 naira, only for you to come and sell it tomorrow at $1 equals 500 naira. The differences in this value is how you make profits trading in the Forex market. Again, the Forex market is the largest and one of the most liquid market in the world, attracting a high volume of investors from all walks of life and experience. Let's briefly look at the history of Forex. You see, at the end of the World War II, the world was experiencing so much chaos that the major Western governments felt the need to create a system to stabilize the global economy. That system was known as the Bretton Woods systems. The agreement set the exchange rate of all currencies against gold as at that time. Okay, now this agreement stabilized exchange rates for a while, but as the major economies of the world started to change and grow at different speed, the rules of the system soon became obsolete and limiting. Soon enough, 1971, the Bretton Woods Agreement was abolished and replaced by a different currency valuation system. With the United States in the pilot seat, the currency market evolved to a free-floating one where exchange rates were determined by supply and demand. Yes, it's the normal law of supply and demand that you know. Exchange rates were determined by the law of supply and demand. At first, it was difficult to determine fair exchange rates, but advances in technology and communication eventually made things easier. And then in the 1990s, the computer age and the booming growth of the internet led to banks creating their own trading platforms. It was on account of that that the retail trading world also was invented through a system called the brokers. We'll be looking at that as we proceed with our presentation. So, but meanwhile, I just want us to know how long Forex has been in existence. We are talking of 1971. That's quite a very long age. Okay, if you do a deep research, you will notice that Forex has been existing for as far back as 100 years. So what is the market size and liquidity in Forex, in the Forex market? Reason why we say the Forex market is the largest market in the world is because it has a daily trading volume of around 5 trillion naira daily. That's the daily exchange, the daily trading volume per day is around 5 trillion naira. In the previous years, it was 3 trillion naira. I mean to say $3 trillion, forgive me, $3 trillion. But now it has even increased to $5 trillion daily. That is even bigger than the New York Stock Exchange market. The New York Stock Exchange market was initially the largest market with around $22.4 billion exchange rate daily. Okay, but the Forex market is even 200 times bigger. That's huge. So what is traded in Forex? The simple answer is money. Yes, money is what is traded in Forex. Currencies are what are traded in the Forex market. So when you think of buying a currency as you know, buying a share in a particular country, or like buying stocks of a company, that's how you think of trading. You think of buying a currency as buying a share in a particular country or buying stocks of a company. The price of the currency is usually a direct reflection of the market opinion on the current and future health of its respective economy. So that means that the value of a currency is a direct reflection of the market opinion on the current status of that country's economy as well as its future status. Okay, in Forex trading, when you buy, for example, the Japanese yen, you are basically buying a share in the Japanese economy. So in general, you need to take note that the exchange rate of a currency versus other currencies is a reflection of the condition of that country's economy compared to the other country's economy. So, who are the key players in the Forex market? The key players are basically the super banks, the large commercial companies, government and central banks, speculators. Retail Forex traders fall under the speculators. Okay, when I say retail, I am referring to individuals. Okay, individual traders. We all fall under the category of the speculators. And then you can refer to the super banks, large commercial companies, government and central bank as the institutions. There are basically two people in the Forex market. It's either the institutions or the market makers or the speculators. Okay, and what makes up the institutions are these super banks, large commercial companies, government and central banks. They are the institutions. We are the speculators. What are the advantages of Forex trading? The advantages is that there are no commissions in Forex trading. Okay, you don't pay any commission. The only commission you pay brokers for the services that they offer comes in terms of what is called the difference between bid and ask price, which is called spread. Okay, which is called spread. Again, in the Forex market now, there are no middlemen. You can be directly connected to the liquidity providers. That's why you receive the price of a currency pair as issued in the institutions, as issued in the banks. No fixed lot sizes. Again, what I mean by no fixed lot size is that you are the sole determinant of your risks in trading. You determine the position that you You love to take a trade, and as such, the risks implied on that position. The Forex market is a 24-hour market, 24 hours, 5 days of a week. It's always active. So let's look at the commonly asked questions by people. First one is, why trade Forex? In my opinion, why you need to trade Forex is because Forex is an investment that helps you grow your money by yourself so you can grow richer over time. Don't forget, the only way money grows is by investment. The money grows when you invest. Okay? It is an investment vehicle, just like every other business, that helps you work through the fast lane financial pathway. There are actually 3 financial pathways, but one of the pathways that helps you achieve your goal for financial freedom very fast is the fast lane. And one of the things you find under that category is investment. And we just said Forex is an investment vehicle. It can help you achieve your goal or dream for financial freedom as fast as you think. Okay? Just so you know, Forex is not one of those make money quick schemes. It's not one of those schemes. Okay? So what is financial freedom? Financial freedom is the ability to afford whatever you require to the degree that you require it, as at when you require it, and have the time, energy, and peace of mind to enjoy it. That is what is called financial freedom. And if that is what you desire, then I advise you to learn Forex, because it has the ability to help you achieve that goal in time. Can I learn Forex, or is it too hard? The answer is simple. Yes, you can learn Forex. You can learn Forex irrespective of your gender, male, female. You can learn Forex. The only reason why Forex seems to be difficult is the absence of a quality training and mentorship. The absence of a mentor makes Forex extremely difficult. This is why you need a mentor to learn and trade Forex profitably. Okay? You need a mentor. Can I self-learn Forex on YouTube? Well, you really don't want to be doing that, because you will end up learning the wrong thing. The reason is because, you see, all the resources you find on YouTube are not fully coordinated as regards training or mentorship. They are not coordinated. Today you can come and find a few lessons on, okay, let's say for example, what is Forex. The next day you now come and find the person talking about chart patterns. The next day is talking of institutional trading. So where do you really put those things together? They are not coordinated. And so you take so much time spending your time on YouTube and really notice you have not been making impact on yourself. You have not been growing. You keep making losses. The simple reason is because your learning is not progressive. It's not progressive. It's not coordinated. Nobody is coordinating your learning. The lessons you are taking are not coordinated, so you won't have progressive learning. You are either jumping from, to and fro, not making any significant progress. And you don't want to be doing that. Does it involve lots of mathematical calculations? Does Forex involve lots of mathematical calculations? You see, it really does not really involve mathematical calculations as people exaggerate it to be. Okay, it is a bit of the simple primary school calculations that 1 + 1 = 2, or 1 - 1. It's just those things. You don't need to panic over that. How much can I make trading Forex? Profits are totally subject to your risk reward appetite, your proficiency and skillfulness, your equity, which is your capital now. Okay, these are the 3 things that affect your profitability, or the amount of profits that you make. Number 1, I said, is your skillfulness, your capitalization, your risk reward management strategy, or risk reward appetite. They determine how much you can make in time. But what if you are making 10%, 20%, or even 30% monthly? I'm sure this is far better than most of these, if not all, most of these civil service schemes, imagine you are making 10% of your income, 10% of your capital, 20% of your 30% of your capital monthly. You'll be making much more than 100-200% annually. Okay, it's really rewarding. Is Forex going to crash? Well, it's not a Ponzi scheme, neither is it operated by a single entity. The Forex market is a decentralized market. There is no single entity in control of the market. This is why it is impossible. Okay, this is what makes it impossible to crash. If countries are going to continue carrying out transactions with each other, then the Forex market should continue to exist.